Welcome back to StockSage Insights. I'm Serfaraz, and in today's episode, I'm going to unveil a hidden gem in the energy sector that's been making waves recently. This company has seen its shares skyrocket by over 150% in the past year, and it pays a dividend yield of more than 15%. Stay tuned till the end, as I will also tease another fascinating investment idea for our next episode. Now, let's dive into the remarkable story of Dorian LPG. Dorian LPG isn't a name you might come across every day, but it's definitely one worth knowing. With a market cap of $1.68 billion, Dorian LPG has carved a niche in the liquefied petroleum gas shipping industry. They operate an impressive fleet of 25 very large gas carriers, including 4 dual-fuel LPG vessels. Besides that, Dorian is also a part of the Helios LPG pool, which gives it access to 27 additional vessels. The company has an overall high-quality asset base. Its vessels are on an average around 8 years old, which makes them younger than the global average age of more than 10 years. The company has a global presence with offices in Stamford, Connecticut, as well as international offices in Denmark and Greece. The market Dorian LPG is navigating is not just favorable, it's thriving. The LPG shipping industry has been on a steady rise since 2020 and is projected to grow at a CAGR of about 7.3% through 2028. This growth is primarily fueled by surging demand from Asia, particularly from China's petrochemical sector and India's infrastructure expansion. With forecasts indicating a nearly 10% growth in Asian LPG imports in 2024, American companies like Dorian LPG are perfectly positioned to tap into this lucrative market. Dorian LPG's recent quarterly results speak volumes about their operational prowess. For the quarter ending September 2023, they almost doubled their revenues to $144.7 million, with a staggering 280% rise in adjusted EBITDA to $104 million. Their net income saw an impressive 126% jump to $76.5 million. But it's not just their earnings that are impressive. Dorian LPG's financial health is also in a decent shape. Although the company carries fairly high levels of debt, it also has ample liquidity and generates healthy levels of cash flows. At the end of the last quarter, the company had $192 million of cash reserves, around $578 million of long-term debt, and $838 million of total debt. This translates into a high debt-to-equity ratio of a little over 90%. In the first half of their fiscal year, they generated a whopping $163.56 million in cash flows from operations. After capital expenditures of $7.35 million, they were left with healthy free cash flows of $156 million, comfortably covering their dividend payouts of $81.5 million. Speaking of dividends, Dorian LPG offers an eye-catching dividend yield of 15.75%. More importantly, that yield is fully covered by cash flows. However, it's important to note that their dividend is variable and hinges on the company's financial performance. In good years, shareholders reap higher dividends, and in challenging years, payouts are adjusted accordingly. But for now, I believe Dorian LPG will continue rewarding shareholders with attractive dividends. That's because Dorian LPG's success isn't just a stroke of luck. It's a result of strong demand and favorable shipping rates. In the previous quarter, their fleet utilization rate increased from 91% to 96.5%, while their time charter equivalent rate soared by 60% to $65,000. And the future looks even brighter. Analysts predict that VLGC rates could average around $75,000 per day in 2024, up from $45,000 in 2023. This potential increase in rates bodes well for Dorian LPG's earnings and their ability to sustain high dividend yields. We're witnessing a situation where geopolitical tensions are playing a significant role in shaping the shipping market dynamics, and this can have a positive impact on Dorian LPG's performance in the future. Specifically, the shipping routes through the Red Sea are currently facing threats of attacks from Yemen's Houthi rebels. This situation adds an element of risk and uncertainty to a critical global shipping corridor. Additionally, the Panama Canal, another vital shipping route, is experiencing restrictions on transits imposed by the Panama Canal Authority. These restrictions are a response to the worst drought in 7 decades, leading to low water levels and subsequently reducing the average very large gas carrier transits. These global challenges could further tighten the shipping market, potentially leading to high levels of freight rates. Now let's talk about the stock's valuation. As mentioned earlier, Dorian's shares have gone up by 150% in the last 12 months. Despite the surge, I believe Dorian is still not overvalued. Trading at just 5x forward earnings estimates, it stands well below the sector median valuation of around 10x forward earnings. This valuation suggests that there's still significant room for growth in this stock. And as it continues to grow earnings, its shares will likely keep moving higher. I think Dorian LPG is a great stock that you should consider adding to your portfolio. However, it's crucial to be aware of the risks before making a purchase decision. The shipping market is known for its rate volatility. While we've seen these rates soar in the past, boosting Dorian's earnings, they are equally susceptible to rapid declines. Factors such as economic slowdowns, particularly in key markets like China, could dampen the demand for LPG. This decline in demand has the potential to negatively affect shipping rates, impacting Dorian's financial performance. So, while the opportunity looks promising, balancing it with these risks is essential for informed investing. Before we conclude, remember to back me up on Patreon. As I don't earn from YouTube, it's your contributions on Patreon that will keep these insights coming. You can also support this channel by sharing this video and hitting the like button. And as always, this video represents my opinion and is not financial advice. In our next episode, we'll shift gears and talk about an intriguing automobile stock with booming sales and aggressive plans for growth in the EV market. And no, it's not Tesla. So, make sure to subscribe to StockSage Insights, hit that bell icon for notifications, and join me next time for more investment insights. Until then, keep investing smartly.